Hello traders, Gary Wagner here. It is approximately 10:40 in Honolulu, 4:40 in New York. It is Thursday, the 4th day of October 2012, and this is the daily report for gold and silver, and oh, what a day we are having. Meetings from the FOMC minutes were released this morning. We'll talk about that throughout the show because it is significant, and other activity fundamentally has caused this market to rise dramatically. We are currently trading up about $12 higher on gold. As you can see, current print cash market 1790.88, call it 1791. That's your bid. The ask is 1792. As I said, putting on up about $12 on the day, almost 0.75%. The high today, 1796.70, new record high in terms of the last 7 months, and the low 1779.40. Not to be outdone, we have silver up about 1.1% on the day, just flirting with $35 per ounce. And that $35 per ounce, of course, is based on a bid price. The ask price is well over that right now at $35.12. That puts it up about 38 cents on the day, a low 34.57, and a high 35.23. On today's report, one of the things that I do want to talk about is adding to our current positions, where we will look to add to them, and also trailing stops higher. Those of us that are traders, we'll talk about that. For those that are subscribers and are purchasing physical, we will also kind of touch upon adding to that portfolio and certain points, or what points would that be of benefit to you. That's all on today's daily report. Today's release of the FOMC minutes from this month's meeting were significant. They were significant in that there was only one dissenting vote, which said that they should not continue this open-ended stimulus. In other words, there's a vast majority of the Feds right now that believe that continued easing is necessary. You see that within the marketplace. There were also comments by the ECB, Mario Draghi's bank, that said that they would do whatever it takes should conditions be right for quantitative easing for the European Union. Those two together are pretty bullish in terms of what they are saying for the future, and we've seen that really in the gold market. The one key thing that I'm looking at is the fact that we had these dojis for the last 2 weeks. We talked about the fact the other day that it looked like we were getting a third doji, really toppy or consolidating, could be either. But this move today is significant because it tells me that the odds have now rolled into the favor of breaking through this resistance, and this resistance becoming support. Now, we are looking at a weekly chart. It is in straight candlestick formats. Typically, the one I use is a Henkin chart, but I have converted it because what you can see on this week's move, and we'll take a look at it daily in a second, but what you can really see is a clear and utter break above what was former resistance. You can see it right here. Let me try to go ahead and line that up as best I can. The market is absolutely trading really at and above that point. Now, we are still shy of a couple of points, and I'm going to try to draw that as straight as possible, but we're still shy of this particular high. And of course, this particular high was that 1803, the area above 1800. That's really going to be our next level of resistance. My sentiment right now is that we're probably going to trade above this area. We need to see it close above this area on a weekly basis and a daily basis before I get extremely positive about this next move up and really rule out a corrective phase or wave at this particular point. Now, traders, all I have really done is I have converted our weekly into a daily chart. And what becomes clear when we look at the daily chart is really this consolidation that we had, this sideways market activity that took us in through really the end of last month, September, beginning of October, of course, is here. This tremendous up day here, I believe that was, well, no, this was our $32 move. This was pretty significant. And of course, here we're still trading really near the highs, just off of the highs, but we've absolutely broken above what I believe was former resistance, and we are now in the territory of really seeing this becoming a supportive activity. We've talked about this before, but a pattern identified by Steve Nisson, simply called a scouting party, in which the bulls are testing the fortitude of the bears. I think that what we have is we have our first scouting party really above this point, and if we get support in this area, we'll simply call it a beachhead. It's a fancy way of saying that the former resistance area has now become support. What I've simply done is taken our daily chart, converted it to a Henkin rather than straight candlestick, so we can get a sense or a feel for the building of this trend, the strength of this uptrend, and how it looks in terms of this type of a candle chart. Quite easily seen in terms of, and I'm going to call this our minor count, but on a minor count, you can see that if we look at it from different areas, and I believe that I've pegged this as our low, meaning right in this area right here, to our high, although it wasn't exact or perfect, we can absolutely see that the market came close to that 23% retracement level. And because of that, I believe that that could have in fact been our minor corrective wave. Now, some may ask, well, what about this particular move up and this particular correction down? The issue that I had with this and calling this any kind of genuine correction, one, in terms of straight Fibonacci numbers, it doesn't really correlate. And the second thing is, if you look at this low and you carry it over to the recent activity, you can see that it kind of goes into this area. It's close enough that I don't believe it's in any way a valid wave whatsoever, even on a minor count. Whereas if we look at the high that we made here and compare that to the corrective action, in other words, we saw the market roughly go from 1791 down to 1735 intraday in just a sweep, and then the market really take off. To me, that could be a valid minor wave. There's minor, then intermediate, and then, of course, major. We're in a major fifth. Now, take a look at these candles itself, and let me go ahead and attempt to blow them up a little bit, and so you'll see what I'm looking at. What we're seeing when we look at the daily Henkin candles is as follows. First of all, we now have the absence of the lower wick. That's really good. You can see on the prior days we had that. Here we don't, and here we do. We are trading near the highs of the day, and that's really good, but we're comparing it to the midpoint, and that's why we've got this upper wick. But the upper wicks on a market moving up are nowhere near as significant as having these lower wicks. And so because of what I'm looking at, I think that if we have a continuation and we see tomorrow having strength or consolidation, meaning not having weakness in the market, meaning pull back below this point, I think we're going to build a significant base in the market and move up towards 1800 from there. Silver has also made a very, very significant move. No doubt it is trading on the ask. This, of course, is the bid. This is what you would sell it for, but they're trading on the ask above $35. That, to me, is extremely significant. We've also talked about the fact that when we take a look at this market from our low to our high, and then look at the first, which is a 23% retracement, just like in gold, although it didn't quite reach that area, it came very, very close. And so to me, that is fairly significant in that we might have witnessed any type of corrective action and witnessed it already. Where do I think this market is going to? Well, we've talked about a couple of areas. And here is what I am looking at in terms of where I think that we're going to see silver go to. First of all, really what I'm looking at is a Fibonacci retracement. It's the same retracement, although I've kind of switched the areas around, but it's to show us something different. We're starting from the high that we saw when the market moved up past 37, I believe 37.51 is where I've got it pegged at, to the low, which is around $26. It's a tremendous fall in the market when you consider that we saw a $10 move down, 37 to 26 and change. Now, when we do that, our 23% level, if you notice, is right here, 34.82. And you can also see that there can be no doubt we are trading, and we have closed well above that in terms of the New York market. The cash market, of course, is still trading, although they're on break right now. As you can see, no current print activity. But that's significant to me because my sense is once we form a base in this area, our next really strong target has got to be this top here, or at least the bodies of this top right in here. So call it just at around the $37 mark. Now realize we're in at $29 on this trade. We never got stopped out like we did in gold, although gold we're back into, so I'm okay with that. We've got $6 now on this trade. That's a $30,000 gain per $22,000 invested in the market. That's absolutely significant. Do I think that there's more in store? Do I think that there's the opportunity for more? Well, I have to tell you this. If we can trade and form a support level, a base in this area, I really absolutely believe that silver doesn't have any really strong resistance until these tops, and these tops are sitting at 37, 37.50. So I think that we can take another $1 to $2 off of the market in this trade, but at the same time, we'll have to see how it reacts right in this area. It's a little bit early, but I do believe that we have an opportunity still to see more of a rise within the marketplace itself. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.